In this lecture, we are going to explore a short trade that happened in the euro-dollar 1-hour chart. It's interesting to see the strategy working in different timeframes, so you can observe how the timeframe does not really influence the analysis at all. For all intents and purposes, the timeframe you trade should not be relevant at all. The timeframe choice is a tool for you to fit your trading into your lifestyle. The logic behind this is that price action is exactly the same in all timeframes. The only thing that differs is the temporal scale in which trades happen, meaning the time it takes for trades to run their course. Let's begin the analysis of this chart. Once again, this is a difficult scenario because we have conflicting major and minor flows happening all the time, and sometimes this can be a little counterintuitive and confusing. In number 1, we can see a massive bullish candle with a relatively short downward tail, a large body and almost no upper tail at all. The interesting thing here is that the downward tail of this candle is almost the same size as the previous candles. If you look at the candle alone, the tail might not seem that relevant, but if you put it in a relative context like that, that tail begins to look pretty important. The interpretation I get from this downward tail is that there were some sellers near the opening of this candle, but they certainly got smashed by the overwhelming power of the buyers in the candle. From 1 through 4, you can see that the market creates a higher high in 4 and a higher low in 3. Number 3 is solid market structure at this point because 4 closes above 2. However, between 4 and 5, a rather sinister game plays out in the market. Notice that price pierces the low number 3, but it never closes below it. This makes the high number 4 a fake market structure. Once price starts to create minor highs and lows after number 5, we can confirm this was probably a market manipulation. We are not going to go in greater detail about that now because the mechanics of such manipulations require a course on their own. All we need to know for the fractal flow strategy is that 2 through 5 is an expanding pivot formation, and an expanding pivot formation like this means a significant area for buyers to appear again in the future. Notice that after number 5, price goes sideways for about 10 candles, and then it begins to increase volatility to the upside. This is where the black rectangle is drawn to extend the area where buyers decided to bring the market up after the probable manipulation in number 5. The market between number 5 and 8 is nothing special other than it is maintaining its major uptrend. Things start to shift a little bit in the market vector between 8 and 9. By the way, at the very top of highs 6 and 8, fractal candles appear to pinpoint the imminent reversal. However, don't even think about trying to trade those candles on their own without context because you will get burned repeatedly. Look at what happened between 8 and 9. Price goes precisely to the solid market structure marked in number 7. We know 7 is solid because 8 closed clearly above 6, so there are some buyers around number 7. Notice that candle number 9 is a fractal candle as well, and you could have been tempted to place a long trade right after candle 9, and you would be correct because there was in fact some context for a long trade there. It would be a legitimate trade. The only problem is that it is in the middle of a flow shift in the market, so the trade would have been stopped out, which is fine as long as you placed a stop loss right below number 9. By the way, this is what a losing trade in the fractal flow strategy would look like. You would be stopped out, but your stop would be small, so it would not hurt so much. Notice also that candle 9 has an interesting shape. It has a small body and a large downward tail, which means there were indeed some buyers in the low number 7. Once again, the key to anticipate the flow shift here is to look at the volatility of the movement produced by buyers and sellers. Look how strongly the sellers come down between 8 and 9 and look how weak the buyers are after candle 9. The market movement between 9 and 11 is where the flow shift occurs. After 9, buyers attempt to begin their rise to break high number 8 and create a higher high and solidify number 9 as undeniable market structure. However, as you can clearly see, they absolutely failed to do that in number 10, and sellers picked the control of the market after number 10, broke down the low number 9 and created a solid market structure in number 10 as a confirmed high. In 10.1, you can see that buyers from low number 9 attempt to stop the sellers once again in a bullish fractal candle. This is valid long trade setup if you look at the market objectively. However, after high number 10, you should be able to recognize that buyers were not really in control of the market anymore. This is why subjectivity is important in our analysis. This idea of who is in control of the market is hard to reach by purely objective terms. In 10.2, we have another interesting fact. The market goes up to the turning point on high number 10, which is marked by the upper line of the black rectangle, but it creates a fractal candle down right after the fractal candle up in 10.1. This is an indication that sellers are not willing to give up the recently acquired control of the market that easily. You can see that the market drops violently after that. The narrow black rectangle between 10 and 10.2 is the area where sellers really proved their point to the buyers. Notice that the upper line of the rectangle comes out of the turning point from 9 to 11, and the lower line of the rectangle comes out of the high of that fractal candle down. In number 11, we see the market reaching the major buyer area we marked in number 5. Once again, price is producing a fractal candle with a large downward tail. You could consider buying here as well, and you would be correct. The trade would not be enough to produce a 1 to 3 risk reward, but it would be certainly enough to collapse risk and get out of the market unharmed. From number 11 on, things start to get even trickier. Notice that in number 12, the market almost reaches our narrow black rectangle of sellers, but it produces a fractal candle a little bit earlier. Once again, acceptable short trade idea here, and this one would clearly be good if you placed a stop loss right above the fractal candle number 12. Easily a 1 to 4 risk reward trade. However, I want to show you the difficult trade on the chart. Notice that the sellers between 12 and 13 were not able to create a lower low than number 11. This is a problem for us here because now we have to decide who's stronger in the market. The buyers from number 5 or the sellers from number 10. At this point I would say that it's almost impossible to tell who the strongest player is here, so we need to rely on other details to enter a trade. After low 13, notice that price creates a huge bullish candle that stops right in our narrow black rectangle that's coming out of the flow shift point in number 10. That's obviously a scary place to go short because of the sheer violence of that huge bullish candle. However, notice that our narrow black rectangle hasn't been violated yet and price creates a fractal candle down in number 14. Here we have a fractal candle happening inside the already divergent price territory marked by the blue rectangle. We have all the elements to go short in the open of the candle next to the fractal candle 14. We have solid market structure as a double protection in number 10, which happens to be the flow shift level of the sellers, and we have a second-degree fractal reversal divergence happening exactly in our narrow black rectangle. The only thing that could stop us from opening this short trade was the size of that bullish candle right before the fractal candle down in number 14 plus the fact that sellers failed to create a lower low than number 11 in the vector between 12 and 13. However, this seems to be a pretty even battle between buyers and sellers, and that massive bullish candle before the fractal candle 14 could be an exhaustion movement. Beyond that, if we look at the space between market vectors, it seems like this market is in sideways mode between 11 and 13. This is a difficult trade because there is no way to know which of the market players is indeed the strongest. This is where we have to assume risk and count on a little bit of luck to help us despite how juvenile that may sound. I say that because we have the elements to open a short trade, but we could absolutely be wrong here, so we have to literally risk ourselves and see what happens. After all, there is no profit without risk. The short trade you see opened in the chart was triggered in the open of the candle right after fractal candle number 14. The stop loss is not only above the fractal candle number 14, but is also above the high number 10, which was a key moment in this chart and the origin of the flow shift to the seller side. The target was placed down in the ignition point marked in the blue line number 1. If sellers are indeed stronger than buyers in our trade, the market will have enough strength to go down to that point. Our stop loss is about 20 pips and our profit target is about 87 pips, which gives us a 1 to 4.4 risk-reward ratio. Let's see how the market develops. Here we can see the market reaching our desired target. It's important that you review this trade a few times because it's hard to catch all the details at once. Trading does not get much more difficult than this, so if you can get used to this level of analysis, you will be well on your path to become consistently profitable.